Ladies and gentlemen, Greg Michalowski from ForexLive.com. This is the Forex Quick Look. I'm going to take a look at the dollar versus yen. Today's date is February 22nd, 2023. Let's get started. Now it's working our way toward the end of the week, and really over the last 2 weeks, the price action has been fairly contained. Maybe it's a little less than 2 weeks, but anyway, in any case, what we saw was a big, huge move to the upside. I think this is on the CPI day, and the price moved up to 150.88, and then we had a 2-day decline that took the price down to 149.49 level. And since then, the price has been waffling up and down, and the last few days we've seen a little bit of a move to the upside. But today, so far, we're seeing a lower level from yesterday's closing level. We'll see what. I'll take a closer look at that on the hourly chart. But what I like about the price action is the price is above this yellow area through here. This yellow area is defined by a number of different swing highs through here. Then got a little messy through here, and then reestablished support and tried to hold support here above the level on its way to the high price of 151.91. By the way, this high price right here got within a few pips of the high price right here. This is a October 2022 high. So two high prices, nearly the same level, and that is significant. So we saw a big sharp move to the downside, but since rebounding back higher and getting above this swing area is somewhat positive for this pair. Remember that going next week, as long as the price can remain above the 149.70, that's the low of this yellow area, then things are looking good. Now, the 150.15.8 level is also a level to pay attention in the interim, not only today for the rest of the day, but going into next week as well. Because if the price can hold above that level and start to put some room in between this yellow area and the current price, in other words, move higher, then that's good news technically. In fact, the buyers are more in control above this yellow area right now. So now I said I want to take a closer look at the hourly chart, and I'm going to do that just right now. And if we take a look, well, not that one right here. If we take a look at this, this is the same swing area that we saw off of the daily chart. And you can see that the low price this week came down right down to the 70 level, just moved a few pips below that level before rotating back to the upside. These blue and green line represents the 100 and 200 hour moving average. And you can see that both of those levels are near converged, near the 150.17.5 level. That's just above the 150.15.8 level, the high of this swing area. Hence the importance of this level going forward. As long as the price can remain above that level in the short term, guess what? The bias remains more in control. Now, if it were to break back below it, I'll give it down to the 149.70 level to give it a shot. The buyers come in and hold support and move the price back to the upside. But that's it. If the price were to move below that level, then all bets are off as far as the upside momentum goes. I think there would be a disappointment in the trading of this range and lead to more selling in the pair. But as long as we can stay above this level, I think I'll give the benefit of the doubt to the upside. On the top side, we have the recent high prices. It came at 150.64, 150.71, up to 150.78, and then the high price near 150.88 to 91. Those are our high prices from last year and this year. So those would be the targets on the top side to get to and through if the buyers are to take more control. So that's my technical look at the dollar versus yen. The buyers are more in control. I love it. I like it above the 150.15 to 17 level. Stay above that level. The buyers are firmly in control. We'll see if they can keep that control. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.